Hello, I'm really excited that this is our first digital whiteboard that I get to do. My name is Phuc with Alpha B Group in Santa Clara, California. And what I'll be talking about is the difference between two people filing a single tax return to two people filing a married filing joint tax return. So let's get started with the example of $50,000 income from each person. So one person makes $50,000. The tax liability when you're filing single on $50,000 is going to be $5,935. And if the second spouse or second person makes the same amount of income, $50,000, their tax will also be $5,935. We add that together, total tax liability is $11,870. Now, let's say that they get married, the same amount of income, and we're going to compare how married filing joint will look. So on $100,000 income, because they both make $50,000, married filing joint tax liability on this would be $11,864. So technically, you've came out ahead by filing a married filing joint tax return by $6. Yay! But let's see what happens when the income increases to $100,000 each. So at $100,000, filing single, the tax liability is going to be $18,500. Times that by 2, because let's say each person makes $100,000 each, that's a $37,000 tax liability combined. Now, using the same example, but now assuming that they are married, $200,000 in total income, tax bracket for married filing joint on that, or the tax liability on that would be $37,866. If you look at that, when you're filing married, you're paying an extra $866 in taxes. Now let's increase the income one more time. $150,000 each person makes. When you're filing single, $150,000 tax liability is $32,493. Multiply that by 2. Total tax liability for two single people each making $150,000 each is $64,986. Now let's see what happens when they file a married filing joint tax return. Total income of $300,000. Tax liability for married at that income is $69,163. That is a whopping $4,177 difference that you're paying more when you are married. And to put this in perspective, that's $4,177 times, say, the life of the marriage of 10 years. That's $41,770 that you're paying extra in taxes over the course of 10 years alone, and just keeps on paying more and more as long as you are still married. So this really puts into perspective how taxes do not benefit those who are married with the same amount of income, and that's considered high.